Good afternoon, traders. This is Sihle from QuickTrade. Welcome to our technical analysis webinar session. I see we only have two people so far. It's Patricia and Sakile Matlango. Let me check. Patricia. Hi, Patricia. How are you? Sakile. Yeah, Patricia. Glad you're doing okay. I'm also doing, I think, very well. But I'm not looking forward to the holiday. I don't like it. It's taking me away from my work. I don't like that. Sakile, how are you? Can you hear me? But at least it will give us enough time to do our analysis. We'll be able to analyze the market and see what's going on. Yeah, Patricia, I think it is good. Clearly. Oh, okay, perfectly. Okay, you can hear me perfectly fine. Okay, no, that's fine. Sakila, right now it's just the two of sorry, the three of us in the trading room. What are the issues that you are currently facing, Sakile? To Patricia also. Or what are the issues that you guys are facing? You have to come up maybe with your own unique issue that you are currently facing that you'd like me to maybe try and sort it out for you. Sorry, guys. I'll check that, Patricia. You're talking about APN. Okay, I'll look at APN for a bit. I think I won't have to do any analysis there. APN. Okay, Sakil, I understand what you're saying. You have no issues really. You have not attended any technical analysis classes. If I can start maybe from the beginning, that would be great for you. Okay, no, that's fine. We will do that. Sakile, we'll do that. I'm sure Patricia won't mind. Okay, this is the monthly, and this is your daily. I didn't see the email, Patricia. Let me just go in and look for it. I want to see exactly what it says. Okay, ASPEN, it says buy, entry 255.50, stop loss 250.39, target 273. Okay, Patricia, let us try and address your issue here. Your issue with this ASPEN trade. You're saying that you're not happy with it because, I mean, if you check your monthly, it says sell, check your daily. It hasn't really crossed above your moving average. But, I mean, if you check here, Patricia, this bar here, this was on the 19th, right? That was on the 19th, and the close there was 259.14. 259.14, and it was above the moving average. But on the monthly, it's saying no. On the monthly, it's saying no, you cannot buy. I'll show you why you should maybe go in and buy this one. Although I do not completely like it. I'll tell you why I don't like it. One of the reasons why I don't like it is the monthly chart. Check your monthly chart. Your monthly chart, we broke below the moving average in December or end of December, around 277.50, and we haven't really closed above the moving average. We're still under a lot of pressure. We are not looking positive. But I mean, if you try and look for support, maybe that was before you joined the webinar. I've always told the guys that there is massive support around 240 on massive support around 240 on this 26. No, I don't want it on this one here, this turning point. I'll make this line hello, sorry about that, Patricia, and everyone. Okay, guys, I was just trying to get the levels here. The levels that I'm trying to get here is well, I mean 240, 250, around there. There is good support that we have there. So I think the main reason why these guys are saying that well, I mean the guys, the team are saying that it's a buy there around 255. I understand why. That is because we have this support that we have around this area. Check this turning point here. This is on the daily time frame. You see where I have my cursor here? This is the turning point, and we have this turning point that happened in 2016, and another turning point again, 2018. So every time the market gets here, it bounces off and it moves higher. So they are thinking that around 250, 255, it's a good area to buy this one. So there, what's happening is that they are not using the moving average in isolation. If you remember, Patricia, and who else can I ask here? Maybe Sibane, maybe Sibani. This is what I always say. I always say that you must not use your moving averages in isolation. You must make sure that you use your moving averages together with your support and resistance. You guys understand? I'm waiting for you, Patricia. Yeah. No, but I mean, you mustn't just take that at face value. You must question me if you need to question me so that maybe you can get more clarity on this one. Okay. What I'm saying is that around 240, 250, there is a lot of support happening around there on ASPEN. But I mean, if you are a conservative guy, you are not going to buy 250, 240. You'll wait maybe for the market to get to 275. I think the high probability trade is lying around 274, 275. Around 274, 275, when the market gets there, you can go in and sell the market. I think if you do that, if you get a good signal around 275, 274, I think that's a good area where you can go in and sell this market. I think I prefer doing that. Every time this market gets to 275, 280 levels, I think you can go in and sell. That way you can make a bit more money without stressing a lot. Because I mean the price can come back down to 245 again. Price comes down to 245 from 280 to 85 or 275 to 80. Yes, it's supported, but I mean, don't just rush in. Wait for a high probability trade. I think the high probability trade is in shorting this market, shorting it down to 245, 250 levels from 275 to 80. That way, I think you'll make good money without stressing a lot, without the market trying to take you out. Because I mean, if these guys can get another bad press, ASPEN. If they can get another bad press, the price of ASPEN is going to tank again. I know that it may still go down, it may still go lower according to our monthly moving averages here and the structure that we see on the monthly chart. But going long, at the moment, I don't think that is the right thing. If you're an aggressive guy, maybe you can wait for 240, 245. 240, 245, when it gets back down there again, you can go in maybe looking for 275, 280. Okay, that's perfect. Now, Sakile, Sibani, and Joseph. Joseph Maposa, I think you're going to have a problem because I mean, you're using an Android device. Don't you have a laptop or a desktop, Joseph? Because I mean, you may not be able to see what I'm showing on my screen here because I'll be displaying stuff every now and then. So you need to be able to see what I'm demonstrating. But I mean, it's fine. Just listen. But I mean, that won't be enough. That won't be enough. Can you see my charts though? Can you see my screen, Joseph? Ah, yeah, that's going to be a bit of a problem because I mean, you can only hear what I'm talking about. You can't see exactly what I'm demonstrating. So I think that's going to be a problem. You can carry on listening, it's fine. Maybe you can pick a thing or two if you have attended technical analysis before, but if you haven't and this is a new subject to you, yeah, I think it's going to be a big problem. I think it's going to be a big problem. Okay. Okay, it's fine, Joseph. Okay, Sakile and Sibani, can you see what I'm showing? What I'm showing on my screen? What I'm demonstrating here? Can you see my chart? The APN chart, ASPEN. Can you see it? No, no, Sakile, you should be able to see it because I think you're using either a desktop or a laptop. So I can see clearly that you are okay there. But I'm worried about Sibani, Ndiweni, Ndiweni. Okay, guys, let's carry on. I don't know if Sibani is there or not. Let's carry on. Okay. Well, I mean, Sakile, I'm going to focus my attention on you mostly because I mean you are the new guy. It doesn't mean that I'm disregarding everyone else that's in the trading room. Anyone that would like to ask anything, guys, you're welcome to stop me and ask, or just type that message so that maybe I can go back and address it to make sure that you understand clearly. Do I still mind checking GBP USD? It went up to start coming down again. With the advanced closing this trade, waiting for take profit at 141 100. But I mean, where did you go in, Patricia? I did not see the trade. Let me quickly go check there. Do you mind if I go in and check this trade? Okay, it's fine. Let me check. Patricia. GBP USD. At what price did you go in? You went in at 139 500. Okay, and that was on the 16th. Okay. Well, I mean, the trade idea that we sent out, I don't know how you jumped into this one. Was it because of maybe my analysis while we were doing the webinar? I do not know. But I mean, yesterday we went out at 140 500. Some guys went out at 140 600. What happened to you there, Patricia? Yes, it's doing well, but I found it, yeah, but then bombs down. Okay. Uh, yeah, it's not a bad trade. You know what I think you should do here, Patricia? You must just go in and try and make your TP. Try and make your TP 140 500. I think you can try and make your TP 140 500. Put it down a bit. 141, I think, is a bit too high at the moment. More especially if we are going into the FOMC meeting in the States. I think on Wednesday they're going to conclude and tell us what their decision is when it comes to interest rates. Are they going to hike interest rates? Are they going to keep them steady? What's the I mean, how's the tone going to be like? Is the tone going to be accommodative? Is the tone going to be aggressive? So all those things are important for the people to know whether they need to buy or sell the US dollar going forward. But I think maybe moving a stop lower down to 140, 500, I think maybe is more cautious. I think that's the right way to do it. Okay. Okay, I've closed that one. Let me show you what I'm talking about here. Let me show you what I'm talking about. Yeah, 140,500, like that, Patricia. That's how you should do it. You're welcome. If you want to wait for 141, it's possible that we may still get 141, but I think, I think it's going to be very risky for you to remain on that trade while these guys are busy having a meeting, the FOMC, the Fed, and after that they need to come out with a decision whether they're going to hike or not. You do not want them to make that decision while you're still stuck in that trade, unless if we reach our profit target today. But I mean, if we won't reach that profit target, I wouldn't want to be in while they are still deciding or making that decision whether they are going to hike interest rates or not. Okay, let's check the daily quickly. Daily, yesterday we closed at 142.35, and these are the levels where we're currently trading at the moment. I'm suggesting 140,500 because I think that the price is likely to go back up there. Because I mean, if you check on your daily, you can see that around 140, 140, 900, 140, 800, we have some resistance around there. So it's possible that we could see maybe the price reversing, maybe after hitting 140, 800, 140, 900. We could see maybe the price coming back down to 137656 before picking up again. So I think it's very important for us to, put that take profit around 140,500 and get out of that trade and wait and see what the market does next. Hi Mutala. Okay, let's leave this one now. Let's go and look for another trade that we can use an example here for the guys that are learning, the new guys like Sakile. Let me remove all the lines here. Sakile Koshe, Patricia Sibani. This is the monthly chart that I have on my screen. I understand that maybe some of you have not attended any platform training. Did you attend platform training, Sakile? Sakile, have you done any fundamentals? Oh, sorry, technical training. Not technical training, the platform training. Platform training. Coming to the office to learn how to navigate and use the platform. Have you done that? No, okay. But somehow you know your way around it. Okay. Koshe, have you done any platform training? I'm sorry, I cannot. I don't know how to pronounce your name. Is it Kushe or Koshe Mhlala? Are you there? Are you there, Mhlala? Doesn't seem like it. Okay. Sakile, I'm going to focus more on you, like I said earlier. Okay. This is the monthly chart. When you go to time on your trading platform, this is a downloadable version. It's not a web-based version. It's a downloadable version. You go to time. Once at a time, if you don't have the one capital M, you go down here, you go edit. You go to one of these boxes, the boxes with a plus sign in them. You go there. When you put your cursor on there, it says add new item. Click on add new item. The period, go down here to period. There is an arrow pointing down. Click on that to get the menu. Amongst those, you have the year, month, week, day, hour, minute, second. So you are looking for the monthly time frame. You go month. The default value there is 1. Under value, the default figure there is 1. It's a monthly chart that you're looking for. So we're just going to keep it on 1 and go apply. And we have our monthly time frame now. You go there, you have your monthly time frame, and you go 1M. There's one small m and one capital M. The one capital M is for the month, and the one small letter m is for the minutes. If you put your cursor on it, like if you do this, it shows you like if you do this, it shows you value 1 period minute, value 5 period minute, because it's minutes. Okay, now we have our monthly time frame. The reason why we have the monthly time frame, because it gives us more data and it gives us a better view of what is happening in the market, because we do not want to see only 6 months worth of data. We want to make sure that we see everything that has been happening on a share or on a currency pair, so that we can make an informed decision. Without the use of a monthly chart, is going to be very difficult to be a long-term holder of a stock if you want to buy and hold the stock maybe for an extended period of time. Because I mean, sometimes it is important that you, well, I mean, there are stocks that you can buy and sell every day, but there are stocks that you need to buy and hold them in your portfolio to make sure that your book grows or your investment grows. So, okay, there's this thing that I have, this big red line here that I have here. What I'm going to do, I'm going to remove it. I want us to add that that simple moving average line again. You go to, you right click on your screen. You go to indicators. You go to add indicator. Click on add indicator. And you go to moving averages. You go to, we're looking for the SMA, simple moving average. Click on the simple moving average. You say OK. Then you move the period to 10. The period of simple moving average, we always keep it on 10. You move it to 10 and go OK. You go OK. Now you have your simple moving average, Sakila. Every time when you see a stock trading above the moving average Sakila, this red line, you must know that stock is in an uptrend. That stock is bullish, it is going up. The moment you see the stock breaking below this moving average on the monthly time frame, you must know that the stock is starting to decline. Every time it is above, it's going up. Every time it is below, it means that it's going down. So this is your starting point. Every time when you need to make a decision, you need to buy or sell the stock, first check how the monthly looks. If the monthly chart is looking good, you go in and buy if it is above the moving average. If it is below, it means that you must go in and sell. Sakile, do you understand what I'm saying? Can you repeat what I've just said now? Hi, Nelson Patlane. Do you understand what I've just said now? Is there anything that you can... Oh, okay. You want to know what currency pairs are and as well as stocks. Okay. Currency pairs, we are talking about Forex. Stocks, we're talking about shares, like your normal MTN, your normal Exaro, Devon Deep, BAT, and all those. So we're referring to the normal shares listed on the JSE. We can either call them stocks, shares, or I like using stocks. And the pairs, we are referring to the currency pairs. We are referring to Forex. Forex, we call them currency pairs because there is no foreign currency that trades on its own. You need to have maybe the euro against you, you need to have the pound against you, you need to have the US dollar against you. So they always go in pairs. So that is why we sometimes call them currency pairs because they go in pairs. That is the reason. Are you happy with that, Sakila? Okay, Sakile, about the moving average and the monthly time frame, could you please give me your understanding there? Doesn't need to be a very long thing. Short and sweet, straight to the point, my man. Please. Nelson, did you understand what I said? 100% Sakile. Above the moving average, bullish. Below the moving average, bearish. So, what can you tell me about ASPEN right now? That is ASPEN. It seems bearish. Why? Because it's trading below the moving average. The 10 simple moving average that we use there. So it looks bearish. So therefore we cannot go in and buy ASPEN. Would rather wait for ASPEN to get to levels where we think that is a little bit overbought in the short term and go in and take some shots on it. Like every time it gets to this point here, I will tell you what the point is. This is the close. Every time it gets to 277.50, every time it gets to 277.50, sellers step in and push it lower and sell it from 277.50 down to about 235, 240. That's where it goes after that. So it's looking bearish. Msala, are you following? Are you happy? Nelson, are you happy? Okay. Now that we know that the APN is looking bearish, now what we need to do now is to look for buy opportunities. Or before we look for buy opportunities, this is another thing that we need to do here. We need to check for the turning points. The turning points are very important in any market. Turning points mark support and resistance. Turning points on a line chart, they mark support and resistance. Here at the top, we have different chart types. We have line chart, we have bar chart, we have candles. We are using candles and the line charts interchangeably. We use them. We move from one to the other every now and then. So right now we are looking at the possible turning points on ASPEN. Okay, this is the turning point here. Well, let me just leave it on these two lines that I've just drawn here. But I mean, you can draw another line here. You can draw another line here. These are important turning points. You want to check what the market does when it gets to these points. We have 279.70 and we have 269.119 on a monthly time frame. Those are the levels that we have here. We have another level here again at what is this level? This 250. We have another level around 250. Now we need to change this back to a daily time frame from a monthly, because we've now gotten our levels. So you can see every time the market gets to 279, there is a big selling that happens. So that is why we have to draw these lines to mark these levels. At the bottom here, around 250, there's a lot of buying interest that comes up when the market gets down there. Buyers step in and try pushing the price up. So what's happening right now is that the price is likely to go up to 270. If it manages to kill 270, we're going to go towards 280. Around 280, I think we have many orders waiting to sell there. But I mean, that's not what I wanted to mention. What I wanted to mention is that once you've noticed that the share or the currency pair is in a bearish trend, what you need to do is to get the daily to agree with the monthly chart. If the daily chart agrees with the monthly chart, then you can go in and do whatever that you need to do. Sell or buy. Like here, when the market hit this area here, it closed below the moving average on the 26th of Feb. You are supposed to go in there and sell ASPEN. Here again, it went below the moving average. You're supposed to go in and sell ASPEN. Why are you selling ASPEN? You're selling ASPEN because the monthly is saying sell, and the daily now is now trading below the moving average. Anything below the moving average, you know that is bearish. But when you're selling, you must make sure that you know where your support is. You have your main support around 250. Around 250, you have your main support. You sell around 269, 270. Gets to 250, you take your profits because you have your support there. Right now, it's just gone above, it went above the moving average yesterday, and right now it's still looking positive. It's still looking positive. You want the price maybe to go up to 270, then 280. I think around 280, that's when you can go in and sell it. But you need to make sure that you wait for your moving average to go below the, wait for your price to go bearish below the moving average on a daily time frame, because I mean the monthly time frame does not change all the time. It changes once a month. At the end of March, we're going to get a full bar at the end of the month. So right now, if the market is saying that we must short ASPEN, we should just remain on the short side, but waiting for the right levels to sell. Wait for some key resistance areas. It's not like a main key resistance area, but I mean it is some serious resistance around 279, 280. Are you guys following? Are you guys happy with that? Patricia, you're saying with you. I don't understand, Patricia. What do you mean with you? Sakile, yeah, okay. Okay, perfect. Now let's go and look for another stock. Give me a stock, Sakile. Any stock that you want us to go have a look at? Anyone? Oh, okay. Nelson is saying we should look at okay. I don't know. Do you have an SSP, Nelson? Aren't you referring to SPP? Oh, okay, that's fine, Nelson. We'll go have a look at SPP first, then DSY. No, no worries, Sakila. Okay, SPA. Nelson, could you please give me your analysis on SPA? Could you please tell me what's happening here? What's your take here? What do you think one should do here? This is the monthly time frame. Nelson? I don't like your answer, Nelson. I want you to tell me according to the SMA, because I mean this is the reason why people forget the basics and start talking about different things. We're just focusing on the SMA. It is above the moving average, so therefore it makes sense to be on the long side. That's what I want. Not that I think I should buy. No, based on what? Because it's not about your thinking. It's about what you see. You don't trade what you think, you trade what you see. Because we are doing technical analysis. We are not doing fundamental analysis, trying to value businesses and all of that and thinking. Here we just not required to think a lot. We just required to see what the market is giving us and then act. So the moving average, the price moved above the moving average end of November last year, and in December it went up. It was up 7.4%. In January again, we're up 4.6%, and in Feb we were up 9.3%. And this is March. March so far we are down 3.29%, but I mean we are still in an uptrend. It looks like it's still intact. We're trading above our moving average, so there's no need for anyone to doubt the move up. Now let us try and get the levels here. See if we cannot get these levels. We'll use the line chart for that. We're going to mark these important turning points next to where the price is right now, next to where the price is trading. Okay, we have how many lines? 1, 2, 3, 4. 4 lines. These lines are very important, and the market is trading just above 201, just above 201.91. The low when the market came down was 202.22, and currently we are at 210. So anywhere around 201, 202, I think one can easily go in and buy SPA because it's in an uptrend and it's just above its support. Now let's go check our daily time frame looks like. We'll use the same lines that we drew. On the daily, you get a lot, but I mean, I think that it's better to use the ones that you get from the monthly chart, because I mean the monthly chart is more commands more respect in the market. Okay, 202.50, the price went up. It left this long tail. It gave us a bullish, a bullish pin bar. Now we had this bullish reversal pin bar here, and the price today is pushing higher, although it's not up a lot. It's only up like 43 basis points. So the next level that we are looking at 212.74. 212.74 currently is a bit of resistance for the stock SPA. So when it gets to 212.74 and we get maybe a reversal there, we could see the price maybe coming back down to 200, 202. But the main thing that we are looking for the price and the moving average on the daily. You see on the 12th, the moving average went above. Sorry, always confuse these two. The price went above the moving average on the 12th of Feb, and the price started climbing higher. So what this is saying is that the moment you see the price closing above your moving average, it means that it's time for you to go into that trade. It's time for you to take a long position in that market, because I mean it's in line with what the monthly time frame is saying. The monthly time frame, when you compare it against its moving average, it's saying that we are in a bullish market. And right now, if you are looking at the daily using this example that we have here on SPP, what this is saying is you can go in. This trade has been verified, it has been confirmed, it's a good trade. You can go in and take a long. It's going to be a stress-free trade for you. Go in, place your order, and wait for the market to play out. Let it do all the heavy lifting on your behalf. It went up, and on the 8th of March, the price started sagging. We traded below our moving average. We closed below the moving average. So the market was starting to look bad there. So there you do not buy, because the market has just closed below the daily simple moving average. That is an early warning that this market is starting to turn south. And it has been trading below the moving average since. The 212.23 that we are looking at is very close to our moving average. Our moving average right now is sitting at 212.34, and our resistance that we've just drawn there using the horizontal line, we can see that it's sitting around 212.74. So going in and buying SPP, yes, you can, but I mean it's an aggressive trade, because I mean what you are doing here, you are using only your support. Every time when you go into a trade, it always helps to have something that we call confluence. There has to be a couple of factors that communicate to each other, that agree with each other, that you can actually go in here and take this trade. If the trade is not supported by by more than two factors, sometimes it makes sense for you to skip that trade. Like right now, right here, we had our support here. We had a support around 202.50. We have a support around 207.50. But where is the moving average on the daily? The moving average on the daily is still above the price. And what is that telling you? That's telling you that the price is still under a bit of pressure. The price is still kept. So going in right now could be a little bit risky. So what you do there, maybe in cases like these, you avoid such trades. You wait for the trades that are clear, that are easy. You do not go into trades that are complex, that are going to give you a headache. That is the only way that you can actually make money in the market until such time that I mean, you have actually accumulated enough experience and enough understanding of the market. Then you can go into complex trades that are complicating your life. But as far as I'm concerned, I think it makes sense to go into trades that are clear, trades that are easy to take. Go for easy targets. Do not go for the biggest guy in the room. Go for the smallest guy. Because the biggest guy in the room is going to give you a run for your money, and you don't want that. If you want to win, go for the small guy. Nelson Sakile, are you happy with that? Nelson, could you please summarize what I've just said now, quickly? We're still gonna go to your discovery, Sakile. We're still gonna go to your discovery. Don't worry, we'll still do it. We are not going to use other indicators, Sakile. This is the only indicator that we are going to use here. If you want to use other indicators, yes, you're welcome to do that. But I encourage my guys to go easy on the indicators because they complicate your trading. They make they clutter your charts. Your charts end up having a lot of things. You do not want that. You want to make sure that you have less indicators on your chart. The price itself should be able to give you a clear direction where the market is going. You do not need to try hard. It should be easy. It should be very easy for you to pick the direction in the market using your moving average and maybe your support and resistance levels. If you want to add your MACD, your RSI, well, Bollinger Bands, you may add those, but I don't see their importance. I don't understand why people fuss about those because they are lagging indicators anyway. For clearer information, this is what I think you need to understand, Sakile. For clearer information, you need to understand your support, you need to understand your resistance, you need to know exactly where these levels are. As soon as you understand where these levels are on your chart, you will be able to spot them. And every time the price crosses above the moving average around those levels, or you get a positive close or a reversal around those levels, then you have a trade or you have a trade set up that you can actually work on. I used to use I used to apply a lot of moving averages in my trading. Or beyond moving averages, I had the MACD, the RSI, and everything else. Those things were just complicating my life because I ended up focusing more on those things and losing out on opportunities. But as soon as you understand your support and resistance, and the fact that every time the price crosses above your moving averages, it's time for you to go in and start maybe accumulating on a particular stock or a particular currency, or start selling if the market is on a declining trend. You know. Okay. There's something that we teach here. I mean, in our in our business here, we teach the use of the risk reward calculator. We teach the use of the risk reward calculator. How much are you going to make? How much are you going to lose? If you get 2:1 or 1:2, then you know that you can go in for the trade. You lose 50% to make 100%, or you lose 1 to make 2, so you go in for the trade. But I mean, what I've noticed in trading is that the most important thing to understand is your support. That is where you enter. You enter at support, and your stop loss, you put it below your support area. You enter at support, you put your stop loss below your support area. You make sure that your stop loss is out of the way, and your take profit is at your next resistance, depending on how strong that move is. But your take profit is supposed to be placed at your next resistance area. That's if you are long. If you are short, the opposite is true. You enter at resistance, you put your stop beyond your resistance, and your take profit is your next support if you are going short. Well, I mean, it depends. It depends on the chart and the candles that you have there. Let us try and get an example that we can try and use here. What can we use here? I don't want us to look at something that has happened already. Okay, okay. Let's do DSY. Let me see if I cannot find anything on DSY, guys. Let's use it. Okay. Okay. This is your support on DSY. Oh, this was your support. It's no longer support right now. Well, I mean, it is still support, but I mean, you're not going to use this one. What you should do, Sakile, I don't know how well you understand maybe price action. How well do you understand price action, Sakile? Oh, okay. It's fine. You wait for your bar to hit your support area. Once it's hit your support area and it's bounced off that support area, well, there's a couple of setups that you need to look out for. You either wait for the pin bar, you wait for maybe the bullish engulfing. Your price has to be below the like here. The price came down. It hit this area here, and it's below. Well, I mean, below this point here, this lowest point that you have here. You can have your point, maybe, sorry, your stop loss just a couple of points below your low here, just a couple of points below your low. But because, I mean, we are conservative, we try very hard to be disciplined. We want to wait for our price to first cross above the moving average so that we can get the confluence, because, I mean, that's what we are looking for. We now have the confluence, so we know that around 164, 165 we can go in and buy. Around 164, 165, we can go in and buy DSY. And you can have your stop loss down here below this lowest point that we have here. But make sure that you now minimize your volume that you take on a trade. Minimize the volume so that you don't lose everything. If you are only willing to lose maybe 2% of the value of your portfolio, or 2% or 5% of the value of your portfolio, do that. But now I'm talking about big figures now. Maybe I'm talking about, when you're talking about maybe 100,000 Rand account, you're saying that I'm only willing to lose 3,000. I'm only willing to lose 5,000 in this trade. Anything beyond 5%, no, I'm not willing to lose. So you're going to risk 5%. You're going to work out how many shares you can get, maybe around 165 against your stop loss at maybe 52.50. Work out those shares, find out how many there are, and you know there was resistance here. I mean, just above, but obviously, if you have a stop loss this big, you cannot have a take profit here. And this entry around, this exit around 185, 186, I think was perfect. You go in maybe at 165, and your stop loss is just below 150. Well, I mean, around 152.50. That's like, I think, 12 bucks. And you are only going to make how many rands? 15 rands. It's not a very good risk reward ratio, because I mean that is 1:1. It's almost 50-50. But I mean, if you are aggressive and you think you know what you're doing there, you can go in and do that. But I do not encourage that people do that, more especially in a market that is range bound. No, guys, I don't know if it makes sense. Do you understand what I'm trying to explain to you here? The most important thing, guys, is to get your stop loss out of the way. Make sure that your stop loss is beyond resistance, and there is a price confirmation signal that has been produced. The market has turned around that area, and when you go in, you know that it's a trade that is almost confirmed. Any close below the moving average, if you are selling, is a good thing. Any close at the bottom, just above your moving average, also I think is the good thing. Make sure that your stop loss is out of the way. Do not have your like here, guys. Like here, we have okay. We are looking at resistance. We're looking at this line here around 186. We know that 186 is our resistance. The market went beyond 186. 1, 2, 3. On the fourth day, started coming down. It closed below the moving average. You are below your your resistance line here around 188. Even if you had gone short at 182, even if you had gone short at 182 on this one, if you wanted to go short, I'm not saying that you were supposed to go short. Even if you had gone short here around 182, the market tried to go up, but it did not get to the top there. It did not get there. It started coming down. It started coming down, and those that are short are making money, but those are aggressive traders, because I mean, if you check your monthly is saying Discovery is still on a buy, so you cannot sell Discovery. You can only buy Discovery. Wait for support levels. Support levels, buy Discovery. Like here, I'm looking at something like 175. Let me just go there to double check it. Let me go there to double check 175. Uh, 175, but I will tell you what my issue is there. My issue is the moving average. Can you see the moving average? There is support around 177, support around 175, but the issue is your moving average. And we don't want to blind enter the trade. We don't want to use the blind entry. We first want to get the confirmation, like we got here. Here on the 3rd of Feb, the price hit the support, it went up, it gave us a nice reversal pin bar, and another one here, and the price started moving higher. So you can have your stop below this bar here, the bar that confirmed your entry. This is the bar that confirmed your entry on the 3rd of Feb. The low on this one was 172.50 and the close was 178.91. From there it started going down. The following day it tried to go tried to move lower, but it did not hit the bottom of the previous day's low or the bottom of the previous day's bar. So this is where you should have your stop loss, just below or beyond yesterday's low. If you had the confirmation at the right level, the confirmation, the price action confirmation signal happened around it happened around 175, 177 at support. That area was good support, so it made sense for you to go in and take a long there. Yes, if you want, if you want the second confirmation to get Confluence, wait for the price to go above the SMA and then enter the trade. Are you okay there, Sakile? Are you okay, Patricia, Nelson? Are you guys happy? Any more questions? After this month, guys, I don't expect to hear anyone complaining about losing money. I don't want to hear anyone complaining about losing money just because they did not do their analysis. They did not put the stop at the right place. They did not put the take profit at the right place. I need everyone to be able to place the right stops at the right stop levels, take profits at the right take profit levels, so that we can all make money and stop complaining, guys. Patricia, I'm good. Thank you, Sithe. Having a meeting. Okay. Have a meeting to go to. We'll say goodbye for today. Okay, Patricia, thank you so much. Cheers. See you on Thursday. Sakile, so how do you choose this? How do you choose your stocks randomly? Sakile, it's not random. It's a lot of work. There's a lot of work that goes into that. On the weekend, when the market is closed, that is when you do analysis. You check the market. If you decide to focus on the top 40, focus on the top 40. Do the same exercise that we've just done here. It's going to take you a bit of time, I know, because you do not have a screener. Because I mean, if you had a screener, you just go and say which shares are trading above their monthly moving average, and the screener would give them to you. And if you had maybe screener on the daily also, you say which shares closed below the simple moving average yesterday, and the screener would just throw them back at you, and you'd be able to do your analysis quickly and pick the trades from there. Nelson is covered. Okay, perfect, Nelson. So Sakile, are you happy with my answer there? Do you have any follow-up questions? Yeah, you're covered. Okay, perfect. Thank you very much. I'll show you quickly what I do with Forex. Sometimes if I'm not a lazy person generally, Nelson and Sakile. But I mean, this is what you do. This is the daily chart. Okay, it's taking forever. Okay, this is the daily chart. You wait for this cross on the daily. That's all you're looking for. You wait for this cross on the daily. If the market closes above like this the following morning, when you come in, maybe at 7 or 8 in the morning, check if you cannot find this. If you find this, the price crossed above the moving average the previous trading session, you go in and buy. Here you made you could have made something like 0.44%, which is 44 basis points, just by doing this. It closes above here. Here you go in and it goes up. Let me check if I can find another one like here, close above. But I mean, you must make sure that there is support or resistance where you are trading. Let's look at another trade that we did a couple of days ago and we made some good money out of. This is the trade where we made a bit of money yesterday and a few days ago, I think on the 13th. You see here, it closed below the moving average, but it wasn't too clear. Yes, it's Forex I'm talking about, yeah, but I mean, you can do this on almost anything. You see here on the 12th, the price was below the moving average. If you had gone short here, you could have made money going down all the way. Here, it closed above the moving average. It hit resistance. It started moving down. Here, cross above the moving average. That's how you can do it, basically using the 10 simple moving average. That's how you can look for trade opportunities on Forex. Forex, gold, anything. You can do that just using this simple moving average. You can do that almost every morning or every time when you wake up. Okay, guys, I think we are going to end it here for today. I think we've covered enough. Guys, this strategy will make you a lot of money if you apply it correctly. You're not looking for many strategies to make money in the market. All you need is one simple strategy to make money from the market, and that's enough. That's all, guys. Yeah, you must not change the moving average. Even if you move to a lower time frame like your hourly, do not change it. Just keep it at 10 all the time. Don't change it. You're welcome, Nelson. Sakile, thank you so much, big guy, for joining our webinar today. If you have maybe another follow-up question, you can always send me. The email is, please do that, brother. I need people that do that. People that are gonna go and get their hands dirty and come back to me and say, see that we think you don't make sense with your strategy. One that I'm challenging you guys to do that for me. Okay, this is my email address, sita@quicktrade.co.za. If you guys have anything or any trade ideas or trade setups that you see in the market, you can just shoot me an email and ask me what I think about those. I will definitely come back to you, hopefully on time if I'm not very busy. Otherwise, you can allow me a bit of time because sometimes they come when I'm really like stuck in the middle of things and very, very, very busy. Guys, thank you very much. Have a great afternoon. Cheers. Okay, I'll wait for you to finish your message, Sakile. Oh, okay, perfect, Sakile, perfect, Nelson. Cheers, guys.